Come to the next wonderful question. 66. ASF Limited uses INR as its functional currency. ASF wants to limit the effect of currency fluctuation in its financial statement by hedging highly probable forecasted USD denominated sales for the month of July 2019. ASF expects to sell $1 crore 35 lakh during the month of July 2019. On 1st January 19, ASF enters into 6-month forward contract to sell 1 crore 35 lakh at rupees 47.50 per dollar. So this is the forward contract. This is your forecasted sale transaction, and then you are given some rates. On 1/1/2019 spot rate, forward rate. 31st March 19 spot rate, forward rate. 30th June 19, this is the rate at which finally the contract will be settled, and you are going to convert dollar into rupees at this rate. Okay. Now my question to this batch of highly talented student is, will there be a gain or loss on forward contract? Gain or loss on forward contract? Loss. Because here there is a contract to sell at 47.50 and the rate is higher on settlement date, 48.50. So therefore you would lose 1 rupee. You would lose 1 rupee per dollar into 1 crore 35 lakh dollar. So that would be your loss. Appropriate risk-free rate is 6%. This is for discounting purpose. And assume hedge is fully effective. Assume hedge is fully effective and there is no ineffective portion. Now this line will save a lot of efforts for us. If the problem says hedge is fully effective, means I just need to calculate the change in fair value of forward contract only, and whatever is the change in the fair value of the forward contract, that is my amount to be transferred to OCI. I don't have to compare the cumulative change in fair value of cash flow of hedged item with cumulative change in fair value of derivative. Question tells me hedge is fully effective. Hedge is fully effective means whatever is the change in the fair value of the derivative will be fully transferred to OCI. So is my task simple in this problem or difficult? This is simpler. Okay. So write down a small note, because the student will ask me the question, why you have not drawn the table like the previous one? No need. When the institute is saying that the hedge is fully effective, why to waste my time? As the hedge is fully effective, the entire change in the fair value of derivative, will be recognized in OCI. This is a note I have written for you. You need not write in the exam if you don't have time. Okay. I have given you the reason why, because the hedge is fully effective. There is no need to calculate. This is an instruction from my side. There is no need to calculate cumulative change in the present value of expected cash flow of hedged item. Hello, write fast. Calculate and tell me on 31st March what will be the net gain or net loss in present value term. 31st March. Let me see who can give me the answer. 47.50 was the rate at which we entered. On 31st March, forward is trading at 47.90. So there is a difference of 0.40 into 1 crore 35 lakh. That is the loss, but after 3 months. Because we are on 31st March, contract will be settled on 30th June. So I will need to discount it if the interest rate is given to you. Since the interest rate is given to you, your calculation will be change in the fair value of forward contract on 31st March 2019. Change in fair value of forward contract on 31st March 2019. Write the date in bracket 31st March 19. Take these two rates given in the last column. Take their difference multiplied by, is it 1 crore 35 lakh? Oh, why then I have written 1 lakh 35,000. 1 crore 35 lakh divided by 1 plus 0.06 into 3 by 12. Just check the calculation. Is it rupees? Rupees 5320197? 5320197. Can you do the same calculation on 30th June also? But on 30th June you don't need to discount because we are on maturity date only. So dear student, write down gain or loss on settlement of forward contract. Gain or loss on settlement of forward contract. Now when 30th June 2019 had come, the spot rate was 48.50 and we had booked forward at 47.50. But our contract is to sell forward. Basic thing in forward contract you have to know that if you are selling in forward market and the rate goes up, you will lose because you are committed to sell at 47.50 when the market rate is 48.50. Okay. So is the answer 1 crore 35 lakh? Write on 1 crore 35 lakh equal to this is equal to sign. So first I will pass entry for this amount on 30th June, on 31st March. And then I am going to pass an entry for the difference between these two on 30th June. Then I am going to pay this amount. Then I am going to pay the difference. I am on the losing side in this example. And then I am going to sell dollar at market rate which is 48.50. And then simultaneously I will also transfer the balance in cash flow hedge reserve OCI account to P&L account so that there will be a minimum impact in the profit and loss account. Have you understood? First entry on 1st January 19. Write down no entry because the fair value is nil. No entry because the fair value is nil. If you're running short of time in the exam, then don't write this because time is the constraint in the exam. 31st March 19. 31st March 19. Calculations will help us to pass the entry easily. Working note 1, you can see this number and there is a loss to us. So my entry will be cash flow hedge reserve OCI account debit 532197 to forward contract account 532197. being change in fair value of forward contract. Being change in fair value of forward contract recognized in OCI. Recognized in OCI. And then again come to 30th June 2019, cash flow hedge reserve account debit, in bracket take the difference. You have total loss of 1 crore 35 lakh, already recognized 5320 197. To forward contract, is it 8179,803? 8179,803 being change in fair value of forward contract recognized in OCI account. Being change in fair value of forward contract recognized in OCI account. Right? One more entry. You have to pay the loss. How much is the loss? 1 crore 35 lakh. So what is the entry for paying the loss? Forward contract account debit to bank account. Forward contract account debit to bank account. One crore 35 lakh. Hello. Right. Being settlement of forward contract. Being settlement of forward contract. And then you will sell the goods. You will receive 1 crore 35 lakh dollar, which you will convert at exchange rate on 30th June, that is 48.50. So my next entry, 30th June, bank account debit to sales account. Check the calculation, 1 crore 35 lakh into 48.50. What is the answer? Is it 65 crore 47 lakh 50,000? In the exam, you can write in lakhs, crores, million, but be consistent. First 3 entry in million, next 3 entry in crores. And then you also transfer the cash flow hedge reserve against sales. So sales account debit 1 crore 35 lakh to cash flow hedge reserve OCI account 1 crore 35 lakh. Done. So the net effect in sale account will be 60, which is at the rate of 47.50 only. Which is at the rate of 47.50 only. That is the benefit of forward contract. It should reflect in my financial statement also. Done, everybody? Now one dangerous question. 67. Last question on this topic. But why dangerous? Because here we are going to first solve it like a cash flow hedge reserve problem. And then after it will become a fair value hedge problem. Is it right? So both concept now merged into one. So at least 10 to 12 mark question. Only with prior practice will be able to solve in the exam correctly, fully correctly. Not at all difficult. This is the test of your understanding of this hedge accounting. ASF Limited uses INR as its functional currency. It wants to limit the effect of currency fluctuation in its financial statement by hedging a highly probable, underline, highly probable forecasted USD denominated sales. A highly probable transaction means you have to immediately understand this is a cash flow hedge accounting. So till you pass the entry for sales, till you pass the entry for sales. Till you pass the entry for sale, you will record it as cash flow hedge accounting. Once the sale is recorded, receivable will come in the book. In the previous 2-3 questions, directly we had written bank to sale. But suppose there is a credit sale, it will be receivable to sale. And receivable is also foreign currency denominated. Receivable is also foreign currency denominated. So in that case, now my fair value of receivable can change as the rate of exchange would change. So then I will now follow after the receivables are recognized, fair value hedge accounting. Is it right? Because my receivable become a recognized asset and the value of that asset can change as the exchange rate would change. Right? So let us see. Very easy. Go home, practice again. But first, go home. ASF Limited expects to sell. Now the story starts. ASF Limited expects to sell USD 1 crore 35 lakh on 30th June 2019, which will be realized on 31st October 2019. Now see the question. You are going to sell on 30th June 19. Today is 1st January 19. So we are now planning to sell on 30th June 19, which means it is a forecasted sale transaction. So from 1st January to 30th June, cash flow hedge accounting. On 30th June we have sold, but on credit. So I am going to receive the debtor on 31st October. So from 30th June to 31st October, I will follow fair value hedge accounting. Understood? So the rules of cash flow hedge accounting, remember, up to 30th June, OCI, and then from 1st July onward, fair value through P&L account. To hedge the foreign currency risk, it enters into a forward contract on 1st January 19 only to sell USD 1 crore 35 lakh at a forward rate of rupees 47.50 per dollar. So when are you going to convert this dollar into rupees? On 31st October. That day you will receive the payment from the customer. Date, spot rate, forward rate. So many dates are given. Quarter ending 31st March, 30th June, 30th September, and finally 31st October, when the contract will be settled and the amount from the customer will be realized. And then forward rates are given. So we will enter into forward rate at 47.50 and we will exit at 48.30. Is it right? Since it is a forward contract to sell, rate has gone up, we would suffer loss finally. Now risk-free rate is 6%. So this will be used for discounting. Underline, hedge is fully effective. Hedge is fully effective. So generally, to reduce the task of the student, because in one problem I have shown you, if the hedge is not mentioned fully effective, then you have to keep calculating the cumulative gain or loss in the change in the present value of cash flow from hedged item, which requires lot of calculation, and then again you have to calculate change in fair value, check lower of the two, and that is the amount at which you will pass the entry. This time don't do that. Only calculate the change in fair value of forward contract, and whatever is that change is to be accounted as OCI because the hedge is fully effective. But if it was not given, then your task will be lengthy, because then you have to go up to 30th June for both calculations. ASF designate the forward contract as hedging instrument in a cash flow hedge of highly probable forecast sell for USD 1 crore 35 lakh on 30th June 2019. Again underline, and thereafter a fair value hedge of the resulting receivable of USD 1 crore 35 lakh. Up to 30th June, it is a cash flow hedge. After 30th June till 31st October, it becomes a fair value hedge. Past journal entries, but we will have to calculate the change in fair value on 31st March, on 30th June, 30th September, okay, and then 31st October we are going to get the actual gain or loss. So write down one small format first. Calculation of fair value of forward contract. Calculation of fair value of forward contract. So remember, the contract will mature on 31st October. Forward contract will mature on 31st October. So you have to count from reporting date till 31st October. How many months are there for time value of money calculation? Is it right? So have you drawn the format? Date particular, fair value of forward contract, and change. Change will be required for accounting. Gap between the two dates is the change. First you write down 31st March 19. 31st March 19. Learn the calculation. Only if you can learn complicated calculations, then only you will move ahead in life. Easy calculation BCom, MCom can do. Now when I took the contract, it was 47.50. On 31st March it is 47.90. So first to calculate the difference, okay? For derivative contract, calculate the difference into the value of that contract, 1 crore 35 lakh. And then if the time value of money is given in the problem, respect it, 1 plus 6%. Now what is the time gap between 31st March and 31st October? Is it 7 months? Is it 7 months? So your interest rate for 7 months will be 0.06 into 7 by 12. As I said, this is a little complicated calculation. Everything you have to think and then put there. 6%, 7 months, etc. Calculate. Check my answer. Most probably it is right, but still you check. Is it 52,17,391? Change will also be same, because on 1st January the fair value is nil, which I am not writing, as you write in every problem. 1st January fair value is nil. From 0 to 52,17,391 means change is also equal. But next time you will compare these two numbers, okay? Can you try 30th June 19? 30th June 19, now the rate is 48.80. If I want to enter into forward contract, which will mature on 31st October, it is 48.80. I had entered into forward contract at 47.50. So my potential loss is the difference between what I had entered into and what is the market rate right now, into 1 crore 35 lakh upon 1 plus 0.06 into 4 by 12. Why 4 by 12 now? 4 months are remaining. You have to be very alert. 4 by 12. 30th June to 31st October, 4 months. July, August, September, October. Is the answer 17205,882? Now be careful. I have already recognized this much amount in my books. So I am going to recognize the difference now. Difference between these two numbers. Check, is it right? Is it right? 11988,491? Because for passing the journal entry on 30th June, I will pass entry only for the additional amount. This is my cumulative loss. This much I have recognized on 31st March. So next quarter, I will recognize only the additional amount. Try 30th September 19. 30th September 19, same thing. Now how many months are remaining? 1 month. Dear student, try 48.20 minus 47.50 into 1 crore 35 lakh upon 1 plus 0.06 into 1 month is remaining into 1 by 12. $94 0 to 984 negative. But the good news is that your loss has reduced. So I will write here positive figure. I will write positive figure 47802 897. This means I will reverse the entry which I will pass here. Here I will pass the entry OCI to forward contract. OCI to forward contract. Now forward contract to OCI. So one rate purposefully I have given lower so that you will understand what you will do. Now come to 31st October settlement date. No need to compute present value now. You entered into market at 47.50 and now on the settlement date 48.30. Rate has gone up. You have entered into a sell contract. Seller would lose if the price goes up. Seller of a forward contract would lose if the price goes up. So your final loss is 1 crore 8 lakh. Again you have to recognize additional loss. 1397015. Okay. You draw double line here because up to this period it is cash flow hedge reserve accounting. So the difference will go to OCI. And then after that it is a fair value hedge accounting. Then the difference will go to P&L account. Is it right? To better understand this problem, if you want to draw this diagram, you can. From 1st January 19 to 30th June 19, you follow cash flow hedge. And I have written the note also. Today you remember, but after a few months, years, if you open the notebook, you may not remember. Change in fair value will be recognized in OCI. And then you will start applying fair value hedge. Write fast. Don't take photo. Write in notebook. Change in fair value will be recognized in P&L account. And then we have to create one receivable also on this date. So receivable will be restated at closing rate. One more standard will come into picture now. Which standard? Effect of changes in foreign exchange rate. IS 21. Debtor is a monetary item. Debtor is a every year end or every reporting date, monetary item will be measured at closing rate. And the gain or loss on change in exchange rate on monetary item will be recognized in P&L account. So now what will happen? The change in fair value of both the forward contract and the receivable, both will hit the P&L account simultaneously. So this is the theory. Now we'll see actual application in journal entry, how to write journal entries. Many companies do such transactions nowadays. And then when you will join the organization, big organizations, you will be actually required to do this calculation and pass the entry. Very few people now on this planet Earth can do such entries. Okay, you are those rare people. So you are privileged class now because you know the accounting entry for cash flow hedge. So first write down on 1/1/2019 no entry because the fair value of forward contract is nil. Then you come to 31st March. Keep the table in front of you where we have written the last column change in fair value, and it is a negative amount, means there is a loss. Where will the loss be transferred up to 30th June? Cash flow hedge reserve OCI account. So write cash flow hedge reserve OCI account debit. Working note 1. Last column 52/17/391. To forward contract 52/17/391. Being change in fair value of forward contract recognized. And then 30th June 2019, 30th June 2019, same entry for additional loss. Cash flow hedge reserve account debit to forward contract account. To forward contract account 11988,491. Is it there? See, my suggestion is that try to write all digits in the exam. Some smart student they write in crores, and in the process the last 5 digits are lost. Okay. Institute may deduct marks there. They will also do some rounding off. "30th June, I am going to recognize sales now. But this time, the sale is on credit. So I will write debtor account debit or trade receivable account debit to sales account. I will recognize it at the exchange rate on 30th June. Check the spot rate on 30th June. 48.50. Is it there? This is like a normal separate transaction. I am selling on 30th June. I will record the sale on that date rate. Check the calculation. 65 crore 47 lakh 50,000. Is it there? Being sales transaction recorded at prevailing spot rate on the date of sale. IS 21. Transaction should be recorded at spot rate. A foreign currency transaction should be recorded at spot rate. Two standards are right now working together. Okay. This entry origination is IS 21. That is effect of change in foreign exchange rate. A transaction in foreign currency is converted into functional currency at the spot rate on the date of transaction. That is what we have done. And now what I'll do, since I have recognized the related sale, I will transfer the balance in cash flow hedge reserve to sales account. Sales account debit. Sales account debit to cash flow hedge reserve OCI account. you have a balance of 1,72,05,882. This account balance has become zero now, but of course that forward contract account has a balance, and that will be settled only on 31st October. So that will continue. Which is next date now? 30th September. Can you tell me the entry on 30th September? 30th September. Forward contract account debit to P&L account. Very good. Amazing. This shows that you've understood this concept. Forward contract account debit to P&L account, you can write to derivative gain loss in bracket P&L account or directly P&L account as you wish, no problem. Now from this day onwards, it has become FVTPL instrument. In FVTPL instrument, change in derivative is routed through P&L account, only one exception. If it is used to hedge an equity instrument measured at FVT OCI. Why I have repeated so much? So that now you'll remember. So this is the entry. Now the next date will be, we have to also revalue the receivable. We have to also revalue the receivable because simultaneously IS 21 is also working. That is, on every reporting date, monetary item will be valued at exchange rate on that date. So on 30th September, keep question in front of you. The exchange rate is 48 rupees. Previously we recorded at 48.5. So there will be an exchange loss. There will be an exchange loss because the value of your debtor has decreased. Because the value of your debtor has decreased. So pass an entry. Pass an entry. Exchange loss account debit to debtor account. Calculation in bracket 1 crore 35 lakh into 48.50 minus 48. Is it 67 lakh 50,000? Yes. Being debtors restated at closing rate. Being debtors restated at closing rate. Now comes the last date. What is the last date in this problem? 31st October 2019. Keep your table that you have drawn in front of you. What was the loss on settlement last column? 1397015. So you will pass the entry. Derivative loss in bracket P&L account debit. Gain word you can remove. 1397015 to forward contract account 1397015. Derivative loss account debit to forward contract account 1397015. Narration. Change in fair value of forward contract recognized in P&L account. So after all this entry, what is the balance in your forward contract account now? The total last line 1 crore 8 lakh. You can check it also. Is it 1 crore 8 lakh? Are you on the losing side or gaining side? Losing side. So you have to pay the difference and close the account. You have to pay the difference and close the account. And then you will realize from the debtor the exchange rate 48.30. There also there is a gain now because previously we have booked the debtors at, or in the previous reporting date debtors was valued at 48. But when you receive the payment, you will receive 48.30. So 30 paise gain you will recognize when you receive money from debtor, and 1 crore 8 lakh difference on forward contract you have to pay on settlement. So forward contract to bank account 1 crore 8 lakh. Forward contract to bank account 1 crore 8 lakh. Being settlement of forward contract by cash. Being settlement of forward contract by cash. Do you think one more entry is pending? Yes. Which entry? Collection from debtor. So either you can pass one entry or you can first revalue the debtor and then pass the entry for collection. Either way, your answer is same. So what I'll do, I'll first revalue the debtors. It will increase by 30 paise. Receivable account debit 40 lakh 50,000. To foreign exchange gain account, to foreign exchange gain in bracket P&L account 40 lakh 50,000. You can merge the last two entries also if you want, no problem. And 31/10/2019 final entry, bank account debit to debtor account. Bank account debit to debtor account 1 crore 35 lakh into 48.30. Is it 65 crore 20 lakh 50,000? Check the answer. Being cash received from debtor. Can we pass these two entries together? Yes, you can. Then you will write bank account this much, to debtor your book value, to foreign exchange gain this 40 lakh 50,000. Okay. So maybe you can combine the two entries in the exam if you want. Is it understandable now? All of you have written? Practice it again. Now come to the last paragraph now. Accounting for hedges of a net investment in foreign operation. Normally they don't ask question from this part. Okay. No book in the market also contains any question on this part, because you just have to keep one line in mind. It is accounted like cash flow hedge. It is accounted like cash flow hedge. The accounting of net investment in foreign operation is also treated like cash flow hedge accounting. Effective portion in equity and ineffective portion in profit and loss account. Okay, that's it. So this standard IFRS 9 is over. What about the difference between IFRS 9 and Ind AS 109? No major difference. No major difference. The differences are so minor that you don't need to bother right now. Once you qualify, then you bother. Okay.